Hi everybody, how are you doing today? Thanks for joining us. I'll give everybody a minute or two just to jump on, grab your tea, grab your coffee, beer, wine, if you're a midday type of drinker, depending on what time of the day it is in the world where you are. Just put a note in the chat box at the bottom, just let us know that you can see us and hear us. It's always good to make sure that we're not just talking to ourselves on these things. So just let us know that you can see us and hear us and that everything's working. As we're going throughout the webinar today, we're not expecting any issues. If you have any issues sort of with sound or visual, best thing sometimes is just to close it and restart it with the link in the email, or you can put something in the chat box as well. Thanks for using that. We can see that people are coming through. Hi, Steve. Hi, Colin. Hi, Margaret. So that's good. We're off to a good start. So it can only go downhill from here. No, I'm only joking. So I'm really excited about today's webinar. Just before we dive into that, and I hand over to David and Rebecca to do a much better job than I can, go through all things practice ignition and excellent engagements. What I want to do is just encourage you to ask any questions as we're going along today. One of the things that we really like with webinars is being able to ask questions, be interactive, and get some answers as well to what you're thinking. So please feel free to ask any questions as we're going along. If there's anything that jumps out, we might answer it as we go along. But if not, we have got a Q&A section at the end. So we'll make sure we get through everything as we're going along today. So thanks for making use of that chat box already. And like I say, don't be afraid to use it as we're going along. So we've got a superstar, Rebecca, who I understand is going on a bit of leave. So you're in for a very special treat today, because Rebecca's not going to be on many webinars for a couple of months. So if you're a fan of hers, then make sure you're listening and tuning in today. And before I embarrass her anymore, I'm going to hand over to David to introduce today's webinar and take it away. Over to you, David.
Great. From David to David. You're a bit hard on yourself, David. At 1 o'clock in the morning, I think you did a pretty bloody good job. Well done. Well done. All right.
Yeah,
thanks, everybody, for joining us today. Great to be here. Good morning, good afternoon, good evening, wherever you happen to be. My name's David New. I'm the head of APAC for Practice Ignition. And really my job today is to just ask the tough questions to my co-host, Rebecca Mihalic, to try and get her talking, something she usually doesn't have too much trouble doing at all. Beck, did you want to give a quick intro to yourself?
I don't know. I feel like I've been well introduced at this point. I'm an accountant. I've been an accountant for about 20 years now. And a few years ago, I got really serious about my engagements and running my practice a lot better from that onboarding client relationship aspect, and implemented Practice Ignition into our business. And now I have the great joy of explaining to other people out there why they should be using Practice Ignition in their businesses, and how compliant client engagements can really transform the way you operate.
What a job you do of it. You were telling me earlier 150 webinars in the last 2 years. I don't even know how that's possible, but go you. That's phenomenal. All right. So what are we going to talk about today? Quick agenda. If Beck and I do a good job, there'll be some good takeaways, hopefully. First is that you'll learn why engagement letters are much more than just a compliance tool. Should learn about your obligations and who, in fact, it is that governs over engagement letters in Australia. We'll talk about the latest regulatory changes. There were some recent ones around client engagements, and Beck will guide you through exactly what to include and how best to issue engagement letters most efficiently. As David mentioned, feel free to post any questions to the Q&A box, and we will do our best to get through them and answer them. And at the very end of the session, we'll have a really quick poll for you. I'd appreciate if you're able to pop an answer in there as well. Okay. So how about we kick off by discussing the importance of client engagement letters? I know you're a big believer, Beck, in engagements adding value and resulting in significantly more revenue for your practice. When it boils down to it, there are some pretty undeniable benefits of formally engaging your clients, aren't there?
Absolutely. I think that a lot of accountants will have some sort of formal engagement with their clients, particularly at the beginning of an engagement. So we get a new client, they wander in, and we'll sit down and talk about all the services we're going to offer them. But we don't always necessarily keep that updated. And that's what we're going to talk about today, is that whole process around keeping your engagements updated with your clients and why that's so important. So when we're having a look at engagements and having an engagement strategy, what that means is making sure that you communicate regularly with your clients around all the services that you're offering. So that sitting down with them, we do it at least annually, if not more often, and talk about, well, these are the services that we've offered to you in the most recent year, services that we've talked about, services you want to maybe add in the future. And here is an engagement that lists out exactly what that looks like and how much you're going to charge for those services. Now, I'm not going to say I've always done this, because I absolutely have not. I was one of those people who also just shot out an engagement at the beginning of a client joining us, just to make sure I grabbed all their details, like tax file numbers, ABNs, everything we need. And then you would forget about it because we got too busy doing the work. But when you do that, you really put your business at risk of making sure that you're capturing all of the work that you do, invoicing all the work that happens in your firm, and identifying repeatedly how much value you're actually adding to your client's business. And that's what a strong engagement strategy will actually do to your firm, is increase that revenue and increase your client's understanding of the value that you provide for them.
And you've seen that firsthand in your practice, of course.
Absolutely.
All right, well, let's move on to obligations, because when it comes to engaging clients, there's so many common misconceptions out there that we bump into all the time. Do you want to talk to just exactly what your obligations as an accountant or a tax or BAS agent are? Because I think there's a lot of grey in this area still.
Yeah, we actually have quite a lot of obligations. But what I might do first is just go through some of the benefits in a little bit more detail around having a really good engagement strategy. And what you do with that is the ability to be able to clearly articulate your services with your clients so that there's no scope creep is a huge benefit. But the biggest benefit to me is actually minimizing the disputes. So one of the biggest disputes that you have with a client when you if you have any disputes, I should say, with a client is generally around fees, particularly if you have sent them a bill for work that they've asked you to do or you've done for them, and they didn't really expect you were going to charge them. Now, I know that's happened to me, and I know that's happened to almost every client, every accountant I know, and I see lots of us chatting about it on social media. If you have a great engagement strategy where you send your clients a new engagement every time they ask for new work, you minimize that ability to dispute, because they will accept your engagement and your fee before you actually start. And by doing that, you're transparent with your client, and that actually deepens your relationship with them. They trust you more because you're not hiding anything from them. You're not sneaking the bill in the mail tray as they wander out the door after they leave, or shooting them off an invoice from just accounts at well and truly a month after you've done the work. And it gives them confidence that you are comfortable with your pricing and you know what you're doing in your business.
On the topic of disputes, have you seen a significant difference just from where you are issuing current engagement letters compared to where perhaps you may have relied on something that was outdated? What sort of impact have you seen there?
I have actually seen a huge reduction in their disputes. And interestingly enough, every time I break my own rules around engagements, and I'm the only one in the business who does it, and it happens very rarely, but at the very beginning of COVID last year, I did some work for a client, and because I was in a rush, I didn't re-engage for it, and they refused to pay me. And that was the first time in years that we'd actually had that kind of dispute. And that's because I had taught them that you will get an engagement and you will agree on the price before we start work. And that used to happen to us quite regularly, particularly for any advisory services or one-off projects. Our clients just assumed that that was included in our normal ongoing fees, and that they could, particularly when you move to that monthly reoccurring fee situation, they really think that you become this, non-stop flowing tap of information and work, which is not true.
Yeah, interesting. All right. Now, I had missed a slide early on, so we'll go back to where I thought we were, and that is obligations. How about we talk around obligations, because that is an area that's very grey. We hear a lot of different common misconceptions there. So I'll jump ahead, and perhaps we can start by talking straight out. What are the obligations for accountants, tax and BAS agents when it comes to engaging clients?
The first thing to understand when looking at your obligations in Australia as a tax agent or a BAS agent is understanding where you have to look to find out what they are. And there's quite a few places. On the upside, most of these the guidance that's out there for us, it doesn't conflict. And if you comply with one, you're generally complying with the others as well. If you are an accountant and you're a member of any of the large accounting bodies, you need to be complying with APES 305 terms of engagement. That's really the big one that has all the guidance in there that we need. And if you're a tax agent or a BAS agent, additionally, you need to be complying with the TPB's Practice Note 3/2019. Now, that practice note by the Tax Agent Board is a fantastic piece of guidance written in clear English that sets out very, very thoroughly what we can and cannot do, what we should do when we're engaging, and who we should be engaging, how often. And we'll go through that in some more detail in the next slides. If you offer specific kind of services, and the standards you need to be looking at are ASA 210 if you're an auditor, APES 225 for valuation services, and APES 220 if you're offering any taxation services. And that is for all the tax agents out there. You need to be looking at APES 220 as well.
Okay, so how is it that so many accountants continue to rely on old, outdated engagement letters and are not aware that there's this requirement on keeping engagements up to date and effectively a guidance requirement here that says this is what you should be doing?
Realistically, and without giving them too much grief, our reporting bodies have really let us down, and our member bodies, by not keeping us up to date. Engagement letters are not something that I remember in my career seeing a lot of communication really come to us from the bodies to let us know this has changed, here's your standard template. Until a couple of years ago, most of them didn't even provide a template. Even now, a lot of the templates are very clunky items that are hard to follow. They are not in a Word document that you could easily copy. They're long, complicated PDFs. So they put up too many barriers to us actually doing our job properly on this end.
Fair enough. Okay, so what do you actually put into your engagement letters? And I guess the question we get the most is around fees. Should your fees be included in an engagement letter or not? I know some people are reluctant to include them.
And actually, in regards to the fees, there should be at a minimum, even if you're not putting in an actual fee because you haven't moved to fixed fee billing in your practice, the APES actually encourages us to at least put in your rates. So if you're still using time billing, you should be putting in all the different partners' rates, anybody else on the team, anything that could be charged, and if at all possible, an estimate of what the fees are actually going to be. It's one of the things that they suggest putting in there, and so does the Tax Practitioners Board. The other items that you should be including is listing out all the services. Be really clear what services it is that you are going to be providing for your clients, how often you're going to be providing the services. So are you going to be doing BASs monthly or quarterly, annual accounts? Are you doing monthly reporting? If you're doing cash flow work with them, how often is that going to be? Whatever it is, be very clear on how often you're offering that service. Who's responsible for what? So that's what you've got to do for your client, but also what do they need to provide to you so that you can do your job on time? If we're working to strong deadlines, and we need to be giving our clients deadlines and requirements on when and how they deliver their information to us. And the last thing I'd like to bring up is actually what is not included. So that's really key to a good engagement. If there is a potential grey area in your services around items that could be construed as being offered, you should be very clear about what you're not doing. And one of those great examples is anything to do with payroll lodgement services. So if you're doing some bookkeeping services that includes payroll for your clients, and say you're lodging their single touch payroll on their behalf, what you should be including is what you do and do not do in regards to human relations services. So are you doing award interpretation, or is that their responsibility? Are you collecting the TFN declarations, or are they doing it? So be really clear around responsibilities.
You mentioned the Tax Practitioners Board a moment ago, and I remember we had them on a webinar back about a year ago. And one of the comments that rings in my ear is they said, when things don't go so well, particularly when it comes to what is not included, and you know, there's a mismatch between expectations and what was actually agreed to. And engagement letter is really the first thing you're able to fall back on. And I remember the chap from the A2B, I can't recall his name, saying that if you don't have that engagement letter, there's not a lot that can be done to help. Did you want to just talk to that a little bit?
Yeah, so They will try to help you, but the first thing they do is ask for the engagement letter, because that's where we should be putting all this information. And the engagement letter, although it's not actually a contract, it's as close as we get to having a contract with our clients. And if they're going to dispute with us, it's either about fees or services. If we don't have it written anywhere what we agreed upon, then how can we really come back to our clients and show them very clearly what we've done? And we make those people around us who are trying to help us, and we make their job really difficult when we don't do that.
Yeah, pretty good reason to engage your clients there alone, I reckon. All right, who of engagements, who exactly should you be engaging? And I know you have some pretty strong views on group engagements and why they're not the way to go.
Well, they're not just my views, they're also the Tax Practitioner Board's views. So the TPB and myself encourage separate engagement letters for all of your clients and to not engage at a group level. I absolutely used to engage at a group level, and it actually became quite unstuck on multiple occasions because of this. And when we're talking about group engagements, we're talking about if a client has, say, a company and a trust, a super fund, some individual tax returns chucked in there as well. A group engagement will engage all of those entities in one hit, list out all the services that you're going to offer for the whole entire group, and get that signed off potentially by only one person in that group. So the Tax Practitioner Board practice note actually suggests or encourages us to be engaging separately. And they've gone to such length with it that they've specified partners should be engaged separately to other partners. The trustee should be engaged separately to the trust. Husband and wife should be engaged separately, which is actually one of the areas that I've come unstuck upon a couple of times, where I've had a group engagement and there's been a marriage breakdown and I've continued to do work. However, I actually only have the authority of one of those spouses, and that's caused a few issues for me in the past. Again, there's been some problems when there's been a partnership breakdown. So arm's length business relationship has broken down, and I've continued to work for all parties, not realizing that maybe they don't all want me to do the work. Not having that proper conversation and not getting proper sign off by everybody who's involved has caused a lot of problems in the past. So now individual engagements is the way to go.
You've sold me. You've sold me. Now, I've just taken a quick peek at the chat box, and David's doing a great job of managing it there. But a few people have asked about, will the recording be available? So for the benefit of those that are not peeking in the chat box, absolutely. The recording of today will be made available to you. There's another question there around templates. We might come to that later because it's a topic that we're going to touch on shortly. So moving on, another common question we get asked all the time is just how often are engagements needed? Can I simply rely on an old engagement letter that was signed by my client 5 years ago, 10 years ago, and many do that. We've talked on that briefly, but do you want to expand on that a little bit more?
Yeah, there's no way you should be relying on an old engagement, and for many reasons. Number one, the standards tell us to re-engage annually, or at least reconfirm our engagement annually. And what I mean by that, or what they mean by that reconfirmation process, is reviewing all of your services and making sure that they're still appropriate. Are you still offering those services? Are you offering different services? Are you charging different amounts if you're addressing your fees in an engagement? And the reason why you need to do that is so that you're actually properly covered. And if you think back over the last couple of years, even aside from all the additional work we've had to do for our clients with COVID grants and everything else we've done during the pandemic, before that, the nature of our services were changing. They change year on year. There's new things that we need to do. TPARs came in, single touch payroll came in. Now we have single touch payroll finalization at the end of the year. And if that's a service you're offering your client and you're relying on an engagement from, say, 5, 6, 7 more years ago, it probably says PAYG payment summary statements instead, which is not something we even do anymore. So it's really making sure that the work that you're doing is updated and properly reflected. Again, if your engagement's outdated and there is a dispute, you have much harder chance of actually winning that dispute if you haven't reset the terms of your engagement.
It makes such good sense. I can't think of any other industry where you would rely on an engagement letter that's outdated. You would typically engage a client with a current proposal or engagement letter, get signed off on the work you're going to provide, and that'll then govern the relationship. It is interesting that there are many accountants out there that still will rely on an outdated engagement letter. So very interesting, I find it. All right, moving on. There's some very important changes to guidance around client engagements that I think dates back perhaps to July of this year. And I'm guessing not everyone online today with us may be across it. Did you want to perhaps talk us through some of the most important of those recent changes?
Yeah, absolutely. This is another reason why you should be updating your engagements every year, because it gives you that opportunity to actually review if there's been any updates to our standards and to what we need to include in our engagements. All of the reporting body or membership bodies will eventually get on board and update their standard guidance as well. However, they, as I mentioned before, sometimes they're not so great at actually letting us know that this is happening. And particularly APESB, I think they just roll around assuming that we spend all of our free time clicking on their website to see what they've changed. However, we don't. So at least this annual reminder encourages us to do that. So some of the changes that occurred recently in the last sort of 6 to 12 months, we have to include some new clauses in our engagements around confidentiality and third-party responsibilities and data storage. Now, these clauses, all as the confidentiality clause really relies on the Privacy Act, making sure that we are keeping all of our client communication confidential. Third-party responsibilities, if we are outsourcing, the terms of our engagement, the paragraphs that we're supposed to be using and what we're supposed to be putting in there has actually gotten a lot more robust than the original paragraphs that shot around a couple of years ago when outsourcing became more common. So we've really got to make sure that we're explaining to our clients in better detail what we're outsourcing and where we're outsourcing it to. And now the data storage one is actually quite a detailed addition to our engagements and actually has required a little bit of research on our behalf. So the data storage is about where are the providers that you are using for your technology storing the data that you put in there. So if you're using Xero or Intuit, Practice Ignition, Dropbox, Google, all of these different places to store any data, you have to tell your clients who you're storing your data with and where their servers are located. We found the easiest way for this, because it's changing, it does change quite regularly, is we actually have that on our website, and in our engagement letter, we have a paragraph in there that addresses it and then directs people to our website where we can update at least the website more regularly in case there's any further changes. So to be complying with that new guidance and make sure that we're doing what we're supposed to be doing. And we need, aside from engagements, we have to tell our clients this information, and the engagement is the best way to tell them and to have it signed off that they know that we've told them. So to be able to comply with that, absolutely, every year, new engagements.
Cool. You mentioned the CAANZ engagement letter template at the beginning, and actually Neil, who's with us today, has posed a question around it. So I might just break the rules and go to that question quickly. He's commented that a lot of engagement templates from CA and CPA don't have debt recovery clauses at all. This is important if the engagement goes bad, not a question, but something everyone should be aware of. Did you just want to respond to that? We'll be talking about perhaps debt collection later and a way to assist people on that, but did you want to just respond to that comment?
Yeah, so the debt collection process is absolutely important if you are engaging with your clients in a way that actually puts your debtors at risk. So I'm a huge advocate of fixed fee and taking payments up front. Now, I'm an advocate for it because of the way that it changed my practice. Our debtor days are less than 14 days, and they have been that way for as long as I can remember. And the reason why they are is that we take payment details from our clients up front. And a lot of our clients also pay us on a monthly reoccurring basis. The way that we structure our engagements means that we are never more than 1 month at risk for a client if they're on a reoccurring arrangement. So maybe something happens, their credit card fails, we don't get that payment, we stop work immediately. So while the CAANZ absolutely does not have that robust paragraph in there, and we have built one of our own, we don't really need it because we've put in more practical measures in our business to avoid having to go down the debt recovery path at all, because who really wants to waste time doing that?
One of those brilliant little measures might just be a piece of software called Practice Ignition that we may just talk about towards the end of today's webinar, but we'll get there. We'll get there without this being too much of a product play. All right, let's move on. Scope creep and setting clear expectations with your clients. I imagine that scope creep is not a common issue at all for anyone online. Engagement letters go a long way to helping you manage scope creep by clearly setting out and signing off expectations with your clients. For the few that aren't perhaps aware of the terminology scope creep, did you want to perhaps start by just, I imagine everyone is, but just in case, did you want to explain it, perhaps the phenomena and why it happens?
Scope creep occurs at any point in time where we as accountants do work that we're not engaged for, which is probably happening a lot if you don't do regular engagements. It's the part of the work that we do that's probably at most risk of us actually recovering our time and our fees. And that's regardless of whether or not you're using time billing or fixed fee pricing, there is still a scope creep issue with either model. I think that there is this conception in the accounting world that if you stick to time billing that you don't have scope creep issues. That's probably not true, because even when we did time billing, we still had scope creep issues. It just comes down to what our clients are aware that we're doing, are willing to pay for our services, which is where time billing becomes a little bit erroneous. If we spend twice as much time on a job because we've gone outside of scope to what our client was expecting, we're still going to have that scope creep issue. And if we look at what I was talking before as well around that nature of services and why all that's changed, a lot of that scope creep, particularly in the last 18 months, all the COVID work we did with scope creep, we didn't know that was going to happen in advance. There was no way it could have been included in our engagement from 5 years ago that we were going to do all that grant work. So when we provided those services for our client, it was outside of scope. If it's outside of scope, we do it anyway. We're very hard pressed to force them to pay for our time doing that. You almost have no grounds then to be able to dispute for it unless you've had something put into your engagement that says, we're going to do this work, we're going to charge this much under these terms.
I wonder how many webinars have been run this year that have managed not to mention the word COVID. Very few, I'm guessing. There are a couple of options to manage scope creep that you have shared with me in the past. Did you want to just talk through your suggestions there for those online today?
Yeah, I have two main options. Well, they're not my options. I think that they're the generally practiced options in our industry. So we've got the first one, which is my favorite one, which is updating your engagement. If you have great software that you can use to send out engagements really quickly to your clients and really great templates in your business, then it's not a big reach to send them out every time you need to do a big piece of work. So in that engagement, you will specify the terms of the additional work. So for the grants, we sent out engagements to all of our clients that wanted grants that said, yeah, and put through, for example, the most recent Job Saver ones in New South Wales. This is the additional work we're going to do. Here are the terms of that sort of work, because it's different to work we normally do. This is what we're going to charge. And they agreed upon it before we started. So this is a proactive approach. This is being on top of everything in advance. And then the other approach is reactive. And this was me 5, 6, 7 years ago. It is not me anymore. And I'm in a much better place now, thankfully. So this is where we just jumped in a panic. We do all the work. And that means we take on all the responsibility. It's all on us. If our clients pay us, great. If they don't, there's probably not a lot we can do about it because we've already done the work and they didn't agree to paying us to do that. It relies on out-of-date engagements, and it also assumes we've got no problem, that our relationship with the client's always going to be great. They're always going to be happy with what we do and pay us, and that we're never going to have any bad debts, which, given the fact that that conversation was brought up earlier around bad debts, I think it's very rare that we were not going to have a problem.
Cool. Now I reckon Margaret's seen our next question. She's asked a question that I was about to pose of you myself, and that's around one-off projects. Dare I mention the C word one last time, but I'm sure everyone experienced a few of them this year, the one-off projects, thanks to COVID and all the grant work that was done by accountants. Do one-off projects require a new engagement letter, which is basically the same question that Margaret has asked of you?
Absolutely. Yes, they do. And the reason why that they do is there's quite a few reasons, but if we look specifically at that COVID work for now, or if it's anything else, so let's just say a client needs your assistance with the payroll tax audit in the future, or a restructure or anything like that, it's unlikely that the client's actually going to understand what that process is, what their obligations are, and what the work is that you're going to do. Like, really understand that. The engagement gives you the opportunity to put those specific terms for those services into your engagement and have them signed off, so that you have that, not just that agreement from your client to do the work, but them signing off that they understand for that work's going to occur. It's a change to your service, and both the TPB and the APSB require us to produce a new engagement if there's a change to services or any other significant change.
Here's a question we get asked, I think, almost every webinar that we run on engagements, and that is, do you need an engagement letter for an individual tax return? Thanks for the question, Neil. Did you want to respond to that question?
Yeah, I actually have some better slides for my individual tax return webinar. So I'm sure there's one floating around if you want to Google it. But in summary, we're not specifically required to have a letter. And there are some places that say that we can have a brochure. However, that is then sort of brought into question because our requirement under the APES 220 taxation services is that we have written approval from our clients, or we have their acknowledgement. I can't see any way that we can actually get our clients to acknowledge to our terms if they're not signing an engagement. Just having it up on your website where you have no guarantee that they're actually looking at it isn't really getting an understanding from them that they know what they're signing up for and what they're doing. And again, if you use that process where you have a templated service, knocking out the individual tax return engagements really shouldn't take very long at all.
Cool. Lighting up the chat box, there's another really good question from Rahman. Is an approval from the client via text message considered an engagement?
I'm not a lawyer, but I would say absolutely not. I just don't see how that's signing off on an actual engagement letter. I think that you should send them the engagement and get them to e-sign it and send it back.
You'd want that signature, surely. That makes it an agreement, doesn't it? Absolutely. All right. Streamlining your engagements. This is where I get to talk a little bit about the product that Beck and I work for. That is Practice Ignition. Just wanted to tell you a little bit about us because there's a reason why we present a webinar fairly regularly on engagement letters and the importance of engagement letters. And that is that we have a piece of software that does a pretty nice job of streamlining your engagement process. So if you'll stick with me for 5 or 10 minutes, I just wanted to walk you through quickly the Practice Ignition offering and how it may be able to help your practice, like it's already helping over 5,000 accounting practices globally. So just quickly, Practice Ignition is the world's first and only, to the best of our knowledge, client engagement and commerce platform for accountants and bookkeepers. What it effectively does, it allows you to automatically generate bespoke engagement letters based on the scope of work that you're providing to any one of your clients. It allows you to electronically deliver to your clients beautiful looking e-signed proposals and engagement letters. And our most popular feature by far, and there's been some discussion about this already, is that it automates all of your client payment authorities and payment collection. If you're a Xero user, we provide a streamlined back office with full workflow and invoice automation. So there's no more double handling, no more manual invoicing. Moving along, we provide you with a variety of ready-made proposal templates. Somebody asked about that in the chat box already. And they're a huge time saver. They allow you to simply populate them with services from your own service library offerings. And it's a huge time saver in pulling together the engagement letter. What we also do is we allow you to provide your clients with multiple proposal options. So rather than just the vanilla offering, you're actually able to put 3 different proposal options in front of them, which is a terrific way to upsell new services and to be able to customize the way that you package your service offerings depending on what your individual clients' needs may be. For some of you that may have looked at Practice Ignition many years ago, we only accommodated fixed fee billing back then, and we've come a long way. There's been a hell of a lot of development going into the product in the last few years. And now we offer totally flexible billing. We cater for fixed price, hourly billing, unit-based billing, and all of it in the one proposal, if you so wish. We combine as many billing frequencies as you like. So you can have recurring, you can have upfront, you can have on completion. And we 100% completely automate your invoicing and your accounts receivable from a signed proposal. We keep enhancing the product. We added a new feature recently that may have mixed implication, but certainly multiple signatures has been something that our customers have been screaming for some time. Sometimes there is need to capture more than one signature on a single proposal that outlines your engagement terms, such as a company with multiple directors, a family SMSF, with a husband and wife as the 2 directors, or simply just couples that are filing joint tax returns, which happens from time to time as well. And then finally, I think the most popular feature, and we touched on this earlier, is around payment collection. I don't know how many of you have read it, but if you go back 6 or 8 months ago or so, there was an article that appeared in Accountants Daily, and it quoted accountants as being one of the 5 most vulnerable industries from memory when it comes to debt collection and having to write off bad debts. And that was particularly right in the midst of COVID. Nothing like a good pandemic to impact your bad debts. So never having to chase an invoice again is hopefully a very attractive proposition for all of you that are with us today. And I know that's, firms like Bex that have been using Practice Ignition for some time don't spend a lot of effort at all on debtor collection. We do that by capturing your client's payment details up front, essentially, or we let them pay via invoice after acceptance. And then for Xero and QuickBook Online users, we'll even raise the invoice and automatically reconcile the transaction for you. Pretty good, huh? So what I thought I might do, there'll probably be some more questions and I'll have a quick look, but based on that quick 5-minute product pitch, we might just pop a poll up if David hasn't fallen asleep, and that's about 1:30 in the morning, to just see if anyone's
still around.
Great, excellent, David. Did you want to pop that poll up? And we might be able to just ask the audience to let us know if they'd like any further information at all on Practice Ignition. We can send you a link for a free trial, no obligation whatsoever, if you click the top box there or circle. And otherwise, if you'd like to talk to one of our reps, they're happy to give you a personal one-on-one demonstration. Again, no obligation at all, but they can show you some of the benefits of Practice Ignition. On that note, I might leave that open for a while, but I thought I'd go back to the chat box just quickly. There's a few more questions that have come through. With PI, this one's from Kathy Beck, with PI having the ability to have multiple signatures, could this alleviate the need to do multiple engagements and go back to the group engagement? You love this question.
I do love this question. I love this question so much. I wrote a whole entire blog about why you should not be doing group engagements. So the multiple signatures are a great feature. And it's actually something that I am using myself now, but I'm using that to make sure that I have all the parties for one particular entity sign off their engagement. So for example, if a company has 2 directors, I make sure both of those directors are signing off on that engagement. However, it doesn't mean that we now get to go back to doing group engagements. And if you think about a standard group, there might be a little bit more than just the mum and dad involved in a group, particularly as adult children start to get their tax returns done and things like that. Their parents shouldn't be signing off on their engagements. So that's at a base level, making sure that you have the right people always signing off. But not just that, let's make sure that you're not getting any confusion in your services with your engagement. So I've had a client, I've had a few stories over the years where clients have not paid their bills. And one of these have actually gone to court and the client won because the way that their engagement was laid out, it was a group engagement as well. That they maintained that the accountant didn't supply all of the services in the engagement to all of the entities, even when they weren't required. So they didn't fulfill all of the obligations of their engagement. And that becomes really, really messy with group engagements. Let's not forget, if you've got one engagement signed by all these people, we're still not covering the situations of entity breakdowns or business breakdowns. And also the TPV don't want us to, so why upset them any more than we need to?
You've covered that one to death. A few good questions coming through. Annie has asked, do you need to be using Xero XPM?
No, you don't. We integrate with quite a few workflow solutions, but not only that, when I look at Practice Ignition in itself, it's such a fantastic tool. I think you can use it as a standalone just engagement tool if you aren't using any of the practice management solutions it currently integrates with. There's lots of other options for getting your data in there, and we have Zaps, which are fantastic to make it talk to just about anything that's in the ecosystem.
Great. Joe has said she's he or he, sorry, Joe, I can't tell, but an existing customer. I will make sure your account manager calls you. Sorry for not having an option there. We didn't expect too many customers to join us today. And John, you've had a question there around price. I'm very happy to talk to you further, maybe take that one offline. But on the price consideration, our lowest offering kicks in at around about $100 per month. I guess our thinking is that hopefully that's not too much more than a chargeable hour or even a percentage of a chargeable hour for you. But the benefit in collection of your debtors and not having to worry about that all again, not to mention the streamlining of your engagement process, hopefully is worth a half an hour or an hour of your time. I'm only guessing your charge out rate, but hopefully at $100 a month, we more than cover that. And I can see Annie has also questioned price. So again, very happy. My email address is david.new@practiceignition.com. Please feel free to send me an email and I will get the right person in touch with you to talk about that further. Are there any other questions at all? Otherwise, we're kind of at the end of our slideshow for today. And I believe we've probably covered engagements in detail. David, is it back to you?
Yeah, thanks for that both. That was really good, really detailed. And thanks for everybody as well in taking part in the poll as well. So thanks very much for that. And thank you for the questions. It was really interactive. Just as a follow-up as well, just to confirm, we are sending around a recording of this as well. So you can go back over it yourself. If you've got any sort of colleagues or anybody that you work with that this might be of interest, obviously you can pass that on to them too, and we'll be sure to follow you up with some links on the next steps and actually how to get going as well. Also, just to confirm that if you head over to xumagazine.com, in the latest issue of XUMag, and we've got lots of really good content covering practice ignition and some of the things that we've talked about today. So make sure you head over there, look at the latest issue 29 and dive into that as well. And we've got some really good stuff in the next issue. So we like what PI is doing. They're doing some really great stuff and we like to cover it in the magazine as well. So make sure you go and read that. Thanks David and Rebecca for today. Hope you have a good rest of your day, everybody. And we'll follow you all up soon. Bye-bye.
Thanks all.
Thanks. Bye.